Hello, very good morning to all and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Tuesday, the 27th of March 2025. So before we start, let's have a quick look at the disclaimer first, as usual. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yesterday. So yesterday, there is basically no big major movement on the global markets, given the fact that London and US is closed for their respective public holiday, so lower liquidity. But I want to emphasize that this morning there is a rather significant, important news flow up for Japan that created a negative feedback loop into the dollar weakness. So what do I mean by this? So let me share with you my chart over here. Can you open up my chart? All right, so what you could see over here is that this is the 5-day rolling performance, all right, of the dollar against the major currency. So the weakest so far we're going to see over here is that the dollar yen is down by negative 1.33%, down negative 1.33%. And in fact, the dollar yen yesterday, we actually mentioned we flipped to a neutrality stance because of the intraday technical RSI, the hourly RSI, that's bullish divergence. So it trade in a sideways range, and today it actually broke below the 142.35 level, which is the 4-week low on the dollar yen. And the reason why it broke below the 142.40 level, right now it's actually trading around 142. 142.35 kind of test about this level over here is because of Bank of Japan Governor Uda. So today in Tokyo there is this international conference where it's being taken part by key central bankers, excluding for sure Fed Chair Powell. So it's hosted by Bank of Japan, and in today's speech, Bank of Japan governor gave the yen a boost by clearly indicating his intention to continue rising the benchmark interest rate in Japan if the economy continues to improve as expected. All right, so let me put it in bigger, all right, so that you guys could see. Okay, we will adjust the degree of monetary easing as needed to ensure that the bank achieve its stable price goal in incoming data, gives authorities greater confidence that their economic expectation will be met over here. Right, you does say in an international conference hosted by Bank of Japan in Tokyo Tuesday today, means this early this morning Asia session. So it actually then the yen rose as high as 142.28 against the dollar immediately after his remarks over here. So based on his rather not really the extreme hawkish tonality, but I would say rather a lukewarm hawkish tonality, but that actually revised market view that BOJ is on track for at least one more rate change or rate hike this year. So that actually causes the yen to strengthen against the dollar, and by that also kind of create a negative feedback loop into the other currency pair as well, especially against the sterling dollar. Right. So one more news flow that took place yesterday was ECB. Okay, ECB. Okay, where is it? Yeah, this is the one. Okay, so ECB Lagarde in another speech yesterday during the European session yesterday, stating that it's now time for Euro officials to get their act together for a prime opportunity to strengthen the Euro international role and allow the currency bloc to enjoy more privilege so far reserved for the US. All right, so we know that the current US White House administration policy tends to be rather erratic, especially the way of Trump's wanting to implement his trade tariffs policy. And not forgetting over here is that his aggressive tax cuts plans that could potentially widen the US budget deficit further, and that also led to last week Moody's ratings to downgrade US sovereign debt. So given such situation, there could be a potential big push among European officials to actually use this prime or golden opportunity to advocate the usage of euro dollar, especially in central banks reserve a balance sheet. So what I could see over here is that over the years since 2017 all the way up to Q1 2024, based on International Monetary Fund statistics, the dollar still dominate official currency reserve, right? Ranging from around 57% to 60%, and the euro is rather coming in the second place, holding a relatively stable 20% weightage. All right. So if this weightage were to be increased by another 10% more, I mean, in the longer term, the euro dollar may start to gain much more traction on the upside. But for sure, on the short-term basis, that also created a potential positive feedback loop into the euro dollar. That means, i.e., negative feedback loop on the US dollar. That means we potentially start to see more persistent short to medium term dollar weakness as we head towards this week. I'll cover more when I cover the second part of today's daily dose. All right, and also one thing I'll highlight is oil prices continues to remain lackluster. So what we could see over here is the West Texas crude oil. So West Texas crude oil continues to trade below the 50-day moving average. Can't break above the 50-day. Can't break. Okay, let me highlight. Right, can't break above the 50-day moving average after the test of it on last Wednesday, 21st of May. And right now in today's Asia session, it starts to inch down lower. All right, so ever since the high on 13th of May, right, the price action, okay, it's sloping downwards over here, right below the 50-day moving average, that is still acting as an intermediate resistance at around this 61.54 level. And why such lackluster West Texas crude oil movement, despite the fact that we start to see risk on scenario in the major US stock indices futures yesterday, due to that extension of US President Trump threatened of that 50% tariff on EU products heading to US. So initially on Friday, he gave a deadline of 1st of June, and now he extended it to 9th of July. But oil prices did manage to catch up a strong bit, but continues to trade shipping lower highs right below the 50-day moving average. And one of the reasons is this upcoming potential OPEC plus continuation of output hikes over here. So OPEC plus actually moved the July output call by 1 day to May 31st delegate seats. So May 31st will be this particular weekend, which is this Saturday. So last week there was actually a rumor circulating around this potential additional increase about 411,000 K of barrels per day. All right, so there's this 8-nation subgroup led by Saudi Arabia held preliminary talks last week on making another bumper output increase about 411K barrels per day for the third consecutive month. And this is to be finalized during its conference call. So this conference call was earlier on Sunday, and they decided to push 1 day ahead to this Saturday. So that also creating a bit of negative feedback loop on the oil price, as it's double down on the move with another surge set for June. All right, so what it means that over here is that it seems to us that OPEC plus delegate is still pretty much imminent of increasing production hikes, not cuts, in the OPEC region, or among the OPEC plus members, and eventually that could potentially also put a cap on oil prices globally as well. All right, and this could be political driven. Why? Because we know that Trump actually visited the Middle East last week, and one of his pet policy during his campaign trails is to keep oil prices as low as possible for preventing inflationary spikes in the US, despite the fact that whatever that he's doing on his trade tariffs plans, that could also increase the risk of stagflation risk, okay, in the US economy. Okay, so and as well as in today's Asia session, while the liquidity starts to flow back into the futures market. So what you could see over here is that the Nasdaq 100 futures at the start of today's Asia session is actually down by a fair bit. All right, over here. So this is the Asia session start Tuesday over here. The start of the Asia session, 6 a.m. all the way down right now. So it's down about 0.47%. Very similar on the S&P E-mini futures as well, which is the Asia session. All right, so this is Tuesday. Yeah, over here, the start of the Asia session. Okay, down by 0.3, so 0.3% to 0.4%. And the reason of this minor pullback that's being seen on the Asia session right now, as we're speaking on the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures, was due to the fact that there's this German official's remark. Germany Merz, which is the new Chancellor of Germany, warns that European Union could retaliate against US technology companies if the trade conflicts with the Trump administration escalate. So right now we see a bit of brinkmanship play among these two countries. The EU nations and US, as Trump last Friday, he fired his bazooka, threatening a 50% so-called tariff on EU products. Then thereafter, he has a call with the EU counterparts to allow EU to actually proceed with their ongoing trade deal negotiations between the respective officials from both countries. To delay it to 9th of July. But yesterday we have another kind of brinkmanship coming out from EU again, stating that they seems to be not so afraid of Trump's so-called threat, saying that if things doesn't go well, EU could actually retaliate against US technology companies. So it seems to me that there could be some form of tick for tat rhetoric heading forwards. So that saw the E-mini futures, both on the Nasdaq 100 and the S&P 500, declining by 0.3% to 0.4% as we are speaking right now. So later I'll touch on the short-term technical chart on the Nasdaq 100 and the Dow Jones Industrial Average, where yesterday we flipped to a intraday trend bullish bias because it managed to hit our support on last Friday with some positive elements. So later I'll do an update on that. Right, so that's actually sum up to the first segment of today's daily dose, pretty quick because of the not so much of a liquidity yesterday during the US session, as it's a public holiday in the US. So with that, now let us now go on and proceed with the so-called the second segment of today's daily dose, which is the intraday technical outlook. Okay, so with that, let me expand my screen. Right, let me expand my screen first over here. So I hope that things are working fine. Okay, let me expand my screen. Okay, give me 1 minute or a couple of seconds. Okay, so I believe that the voice check should be fine. Screen is moving. All right, good. So let's kickstart with the euro dollar. All right, so the euro dollar yesterday, we tightened our short-term pivotal support level. It's managed to clear above this 1.1280, which is the previous minor swing high of 22nd of May and 23rd of May during last Friday US session. And yesterday it did a pullback, and what we could see over here is there's a gentle uptick, all right, that is being portrayed right now in the intraday price section on the euro dollar. So no change as the price action can't break above our first resistance at 114.25 yesterday, but one thing positive that it managed to shape this nice curvature of U-turn upon hitting the intraday low of 1.1280. 1.1369 during the start of the US session yesterday. So still remains unchanged unless we start to see a bullish breakout above 114.25, then I could tighten my short-term pivotal support level to this 1.1375 level. Okay, so this 1.1375 will still be my first support, and 1.1280 over here at this point in time will still remains my short-term pivotal support to maintain our intraday trend bullish bias on the euro dollar, and also supported by a series of higher low that is being seen on its hourly RSI, hovering above the 50 level mark, indicating some form of short-term bullish momentum still remains intact on the euro dollar by this positive RSI hourly RSI reading. So 1.1280 short-term pivotal support level above 114.25 may expose the next near-term resistance level at 114.90/115.30 as we maintain our intraday trend bullish bias on the euro dollar. Only a sudden push down and the bearish breakdown with an hourly close below 1.1280 that will invalidate today's intraday trend bullish bias on the euro dollar to kickstart a minor corrective pullback scenario, or a minor mean reversion decline, revisiting 1.1280, which is the 20-day moving average, acting as a similar resistance, similar support level as well, pardon me, at 1.1280. Only a breakdown below 1.1280 may trigger off a deeper corrective pullback towards 1.1215 next. So that's for the euro dollar. Next up will be the sterling pound, the sterling against the dollar. So sterling against dollar also managed to actually held above our tightened short-term pivotal support level at 1.3520. So and also right now doing a nice uptick curvature over here as well. And the hourly RSI continues to hold above this parallel ascending trendline support, holding above the 50 level mark, indicating short-term intraday bullish momentum still remains intact on the sterling dollar. So using 135.20 unchanged short-term pivotal support level, so that will maintain our intraday trend bullish bias. Next resistance level to watch in the near term, 136.40. Above it may see 136.90 coming in next, which is the 2 times Fibo extension on the upside from the low of 12th of May, and the upper limit of this medium-term ascending channel that is still in place since the low of 13th of January this year. All right, so this is we're talking about close to around 5 months of medium-term uptrend that the sterling dollar is involving in right now. Only a sudden push down and up bearish breakdown and hourly close below 135.20 that would invalidate today's intraday trend bullish bias to kickstart a minor corrective decline sequence, or a mean reversion decline sequence on a minor scale on the sterling dollar, to expose the next near-term support level at 134.40, followed by 133.95. All right. So now let's proceed with the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar managed to stage that pullback, and the pullback hit exactly at the former descending trend line that was in place previously since 7th of May, got rejected on 14th of May, and finally managed to see a bullish breakout on last Friday during the US session. And today, Asia session, it managed to do a retest on this line here, which is slightly above our short-term pivotal support that we have yesterday at 64.65, that confluence with the key 200-day moving average. Hourly RSI continues to shape a higher low, holding above this parallel ascending trend line support that I drew from its previous oversold region that was made on 20th of May. So indicating that potentially there could be another round of a bullish momentum coming back in the at least in the short term on the Aussie dollar by this positive reading on the hourly RSI. So 64.65 short-term pivotal supports, no doubt about that, in order to maintain our intraday trend bullish bias. First resistance level to watch, 65.45 over here, which is very close to last Friday US session intraday, sorry, not last Friday, yesterday Asia session high, which is 65.37, 537, yeah, 65.37. So 65.45 is, in fact, if you go back in time, is the congestion area of the minor swing high area of 20th of November and 25th of November last year, right? Let me push it back. Okay, only hourly push down and a close below 65, 64, 65. Let me repeat again, only hourly close and a bearish breakdown below 64, 65. That would invalidate today's intraday trend bullish buyers recovery scenario to kickstart choppy downside movement drift again. That means indicating that last Friday push up is a failure bullish breakout to revisit the 64 figure level, 63.90, which is the minor range support level in place since 15th of May. Yeah, 15th of May. So that's for the Aussie dollar. Lastly will be the dollar yen. So dollar yen yesterday we were neutral between 143.45 and 142.35, and today it managed to stage that push down to go slightly below 142.35 before whips soaring around this 142.35 level. So now it's trading at 142.38. So indicating very clearly the RSI, hourly RSI started to depict a bearish momentum reading. Previously lower high can't break above the 50 level mark, stage a bearish breakdown below this parallel ascending trend line that I link up the lows from 20th of May to 26th of May, stage a bearish breakdown, and right now there is no signs of a bullish divergence, indicating that price action may see further potential weakness given that the bearish momentum reading is now back into the picture on the hourly RSI, or as depicted by the hourly RSI, pardon me. So using 143.45, that will be my short-term pivotal resistance, which was yesterday neutrality zone upper limit. Breakdown below 142.35 exposes 141.05 next. All right, so 141.05 is the minor congestion area of 21st of April and 22nd of April. Right, and also the 2 times Fibo extension on the downside taken from the minor swing high of 13th of May. Only a push up and an hourly close above 143.45 that would invalidate today's intraday trend bearish bias for the dollar yen and see another round of minor corrective rebound sequence or a dead cat bounce sequence to expose the revisit the 20-day moving average confluencing with the next intermediate resistance zone at 144.30 / 144.60. So i.e. In a nutshell, given the bearish momentum reading that is being flashed out on the hourly RSI right now, we'll flip to a intraday trend bearish bias again for the dollar yen using 143.45 as my short-term pivotal resistance for today. Next up, we will cover our major stock indices over here, starting with the Hong Kong 33, representing the Hang Seng Index. So yesterday, due to mixed element on the Hang Seng Index, we were cautious on our earlier last week bullish stance, and we flipped to a neutrality stance yesterday, neutral between 23,600 and I think a very tight neutrality level, which is 23,370 or 360. So price action managed to break down the lower neutrality limit, and what we could see is that since the high of last Wednesday, it starts to converge into a minor corrective pullback sequence, probably retesting the 20-day and the 50-day moving average. So with this bearish price movement that is being flashed out in today's Asia session right now, first resistance level to watch will be 23,370, followed by yesterday's bearish candlestick at the open, which is the 23,600 level. So that will be my short-term pivotal resistance for today. We will flip to a intraday trend bearish bias stance for this potential minor corrective decline sequence to play out. Next support level to watch 22,960, followed by 22,680, which is the 50-day and the 20-day moving average confluencing at this two similar support level as well. Only a sudden V-shaped push up with a bullish hourly close above the 23,600 that would invalidate today's intraday trend bearish bias to totally eradicate the corrective pullback sequence and revert the scenario back to the bulls again for another impulsive up move sequence to be flashed out or to be revived, revisiting 23,960 slash 24,050, followed by 24,350 over here. All right, so we will now flip to a intraday trend bearish bias for a potential minor corrective pullback sequence to unfold on the Hong Kong 33 using 23,600 as my short-term pivotal resistance, with these two near-term support level to watch: 22,970, 22,680. All right. Next up will be the Japan 225. So the Japan 225 now staged a minor pullback, almost wanted to revisit the 20-day moving average, I think as a first support level at 37,270. So first, I don't want to tie that so tightly to be at 37,270 in case of any whipsaw. So I'll use the 61.8% Fibo retracement of yesterday's push up, for I would say that Friday's push up all the way up to yesterday's intraday high, 61.8%. So that also confluence with the congestion area over here previously of 22nd of May, and previously that this long bearish candle during the announcement of that so-called 50% EU tariff, 50% EU tariff by President Trump, that is to be bring forward to 1st of June, and thereafter the price action revert stage that V-shaped recovery after he retrace back his statement. So 36,890 will be the slightly adjusted upward pivotal support on the Japan 225 for today, representing the Nikkei 225. We will still maintain our intraday trend bullish bias. First resistance to watch will be 37,925. So that will be our 200-day moving average, I think, as a similar resistance level as well. So only a clear breakout if hourly close above 37,925. So that will open up scope for the next intermediate resistance to come in at 38,460, which is the minor swing high of 14th of May. However, if price action starts to break down with an hourly close below 36,890, then the bulls will be in jeopardy, where price action may resume its choppy downward drift for that corrective decline sequence to extend to the downside, revisiting or exposing the next support level at 36,330, which also confluence with the closely with the 50-day moving average as well. All right, so that's for the Japan 225. Still maintaining our intraday trend bullish bias, but using a slightly adjusted upward short-term pivotal support level at 36,890. Next up will be the Germany 30, representing the German DAX. So Germany 30 yesterday just gap up over here, then just trade the very tight sideways range. So what we're going to see over here is that potentially it may cover the gap up for today. I don't want to tighten the short-term pivotal support to this gap support level here, using a slightly lower level, which is the bullish hammer that is being formed, or the bullish dragonfly that is being formed on last Friday at 23,380. So that would be still my short-term pivotal support level, maintaining that intraday trend bullish bias. Next resistance level to watch after 37,190 will be after 24,190, pardon me, will be 24,440 slash 24,560. Only a sudden push down and hourly close below 23,380 that would turn the tables back to the bears again, to see another round of corrective decline sequence, exposing a minor corrective decline sequence, exposing the next near-term support level at 23,070, and follow if this level can't hold, potentially you may see it dipping further towards 22,685, which correspond to the 50-day moving average as well. All right, so no change, still watching that 23,380 short-term pivotal support level to maintain this bullish bias recovery scenario on the Germany 30. Onward next will be the major US stock indices, starting with the US Wall Street 30. over here. So the US Watch 30 yesterday, because of the closure of that US cash stock market due to a public holiday, so not much action as it tried to trade sideways below the first resistance level, which is 42,080, which I highlighted yesterday. So first support level to watch, there could be a pullback, which is the 20-day moving average. I think as a similar support level as well at 41,720. So I don't want to tighten the pivotal support to be so tight unless it able to clear above 42,080. Then I could use 41,720 as my short-term pivotal support level. So until then, still using yesterday's pivotal support, which is 41,135, to maintain this bullish bias recovery scenario on the US Wall Street 30. Very likely the minor corrective decline of 20th of May to 23rd of May may have already ended, given the strong potential bullish reversal right at the 20 and above the 50-day moving average. So above 42,080, sees 42,440 next, coming in next on the intraday basis. We also confluence with the 200-day moving average. Only an hourly close and a bearish breakdown below 41,135 that would invalidate the bullish recovery scenario to see another round of a corrective decline sequence extending to the downside, exposing the next near-term support zone at 40,690/40,430, which is the congestion area of 29th of April to 7th of May. Next up, Nasdaq 100, very similar price action. All right, first support level to watch will be at 20,995. Still no change about that. Pivotal support level still remains at last Friday low, 20,690. We also confluence with the 20-day moving average as well, and also very closely with this medium-term ascending trend line that I drew from the low of 7th of April. Right, so still maintaining that intraday trend bullish bias for this potential recovery scenario to play out on the Nasdaq 100. First resistance got to surpass will be 21,400, pardon me, and above it may see 21,750 coming in next, which is very close to the 1.382 Fibo extension taken from the low of 7th of April, and as well as this minor swing high area of 24th of February this year. So let me pull it back. Okay, so net overall, all right, unless we start to see an hourly close below and a bearish breakdown and an hourly close below the short-term pivotal support level at 20,690, then that would invalidate today's intraday trend bullish bias to see another round of corrective decline sequence extending to the downside, hitting 20,390 next, which is also confluence with the key 200-day moving average. So in a nutshell, still watching 20,690 as my short-term pivotal support level to maintain this potential recovery scenario. First resistance you got to surpass will be at 21,400 before exposing 21,750. So that's for the Nasdaq 100. Okay, onward next will be the commodities asset class, starting with Gold XAU/USD. So Gold XAU/USD, yesterday we flipped to a intraday trend bearish bias, looking for a potential minor pullback to revisit 32.90 over here. So still no change. Price action start to trade sideways below 33.70 short-term pivotal resistance level. So we'll still maintain our intraday trend bearish bias for this minor corrective pullback sequence to play out. First support level to watch will be 32.90, which is also confluence with the 20-day moving average. Only a breakdown below 32.90 may see a deeper minor pullback scenario unfolding, seeing in the next near-term support level to come in at 32.50, 32.52. So I'm watching very closely these two level over here to look out signs for any bullish reversal candlestick to potentially resume Gold XAU/USD impulsive up move sequence within its medium-term uptrend phase that is still intact. All right, so only a sudden push up with an hourly close above 33.70, then that would invalidate today's intraday trend bearish bias to actually kind of eradicate the minor corrective pullback scenario and flip the bias back to the bulls again to see the impulsive up move sequence resuming, exposing the next near-term resistance in first step at 34.17/34.35, which is the minor swing high area of 8th of May and 7th of May next. and 7th of May, pardon me. So that's for gold XAU/USD, still maintaining, still watching 33,070 as my short-term pivotal resistance in order to maintain this potential minor corrective pullback sequence that may unfold to revisit the 20-day moving average at 32.90. Next up, last will be West Texas crude oil. So I mentioned West Texas crude oil continues to remain lackluster below the 50-day moving average. So no change for our short-term intraday technical outlook, still using the 50-day moving average and also the upper limit of this ongoing symmetrical triangle range resistance that is in place since the low of 9th of April, which is this depicted by these two purple line over here. 6406. So 6406 short-term pivotal resistance level, maintain the intraday trend bearish bias for the West Texas crude oil. First support level to watch on the intraday basis will be 60.35. Only a breakdown below 60.35 may expose 58 next. However, if price action starts to do a bullish breakout and hourly close above the 50-day moving average at 64.06 resistance, then that would invalidate today's intraday bearish bias scenario to see a squeeze up, exposing 64.40, 65.40 next. Above 65.40 may see 67.35 intermediate resistance coming in, which is the minor swing high area of 4th of April. Okay, so that's for West Texas crude oil, still maintaining that intraday trend bearish bias within this symmetrical triangle range configuration, as is potentially drift down towards the lower limit of this symmetrical triangle range configuration, using 64.06 as my short-term pivotal resistance unchanged. So that's also sum up the intraday technical outlook on all the broad-based key cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today's European session? So today will be Tuesday. When we kickstart the European session at 2 p.m. Singapore time, we have Germany GfK consumer confidence data, where market is expecting a slight dip to negative, a slight improvement to negative 19 from negative 20.6. So that could potentially influence the euro dollar, the euro crosses, and the Germany 30 CFD index. Then we have the preliminary France inflation rate as well for the month of May. So for the year on year, on a core basis, the core and the harmonizer, on the core basis, market expecting is unchanged at 0.9%. So that could also impact the movement on the euro dollar and the euro crosses. And at 4 p.m. Singapore time, we have key central bankers officials speaking. Bank of England Hussein will be speaking at 4 p.m. Similar timing will be Fed Kashkari at 4 p.m. as well. And what we could see as we go down the start of the US session, 9 p.m. we have housing price index, so that's tier 2. So the important one, tier 1, is 10 p.m. Singapore time. We have the conference board consumer confidence. So market participants are paying very close attention. Why? Because the previous previous 2 weeks ago, we have the release of another consumer sentiment data, but that is being compiled by University of Michigan, stating increased risk of stagflation. So that was around 2 weeks ago, and market participants will be looking at today's conference board consumer confidence data to see whether does it mirror the weak consumer sentiment that is being compiled by the University of Michigan. Whereas interestingly, market participants expecting a slight minor improvement to 87.2 from 86. So that could also potentially influence the major dollar pair and the major US stock indices upon the release of today's conference board consumer confidence data for May out at 10 p.m. Singapore time. All right, so as we head into the early Asia session tomorrow, so before the start of tomorrow's daily dose, we have 9:30 a.m. monthly CPI indicator for Australia for the month of April. Market is expecting a slight dip down to 2.3% from 2.4% in March over here. And at 10 a.m. we have the RBNZ interest rate decision and the RBNZ press conference thereafter at 11 a.m. Market is expecting a cut of 25 basis point to 3.5%. So let's see how it goes over here. So market may expect a kind of a hawkish cut. That means after this cut over here, RBNZ may signal much more weight and hold approach, all right, over here. So something to look out for in tomorrow early as Asia session tomorrow, 9:30 a.m. a monthly Australia CPI indicator that could influence the Aussie dollar and the Aussie cross pair. Then 10 a.m. which is the RBNZ interest rate decision that could influence the Kiwi dollar and the Kiwi cross pair. All right. So with that, that sums up today's daily dose of market insights. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.